All right, crypto crew, buckle up. Bitcoin Bulletin is dropping hot takes and breaking news that'll shake your portfolio. First up, Polymarket is revolutionizing prediction markets with a game-changing Chainlink upgrade, making Bitcoin bets faster and fairer than ever before. Then, hold onto your hats as Ether ETFs are exploding, pulling in billions while Bitcoin ETFs are seeing outflows. What does this mean for the future of crypto investing? We're diving deep into how the US PPI report just triggered a massive Bitcoin taker volume surge on Binance, showing just how sensitive the market is to macroeconomics. And finally, could your Bitcoin soon be used to buy a house in the UK? We're exploring the wild possibilities of Bitcoin-backed mortgages. Stay locked in, don't touch that dial, and hit that subscribe button and notification bell so you don't miss a single beat. Polymarket just leveled up prediction markets with a massive Chainlink upgrade. This integration is a total game-changer, slashing delays and eliminating disputes in the world of crypto prediction markets. Think lightning-fast settlements and rock-solid fairness for every bet. Before this, users faced frustrating waits and the headache of potential disagreements. Now, Polymarket, powered by Chainlink's Oracle technology, ensures that Bitcoin bets are settled instantly and accurately. This means more confidence for users and a smoother, more reliable experience for everyone involved in these dynamic markets. The crypto community is buzzing about how this upgrade will set a new standard for prediction platforms, making them more accessible and trustworthy. Don't go anywhere, because the market shifts we're about to discuss are huge. Next, we're breaking down the seismic shifts happening with Ether ETFs and what they mean for Bitcoin. Ether ETFs are not just making waves, they're reshaping the entire crypto landscape. This isn't just about another digital currency. Ethereum is a titan of decentralized finance, NFTs, and smart contracts. Now, with institutional investors pouring billions into Ether ETFs, we're seeing a dramatic pivot, starkly contrasting with outflows from Bitcoin ETFs. The numbers are staggering. Ether ETFs raked in approximately $3.87 billion in net inflows during August 2025 alone, while Bitcoin ETFs experienced a net outflow of $751 million in the same period. With Ether ETFs now holding nearly $28 billion in net assets, the balance of market power is clearly shifting, forcing institutions to rethink their strategies. This surge in institutional confidence is directly impacting market behavior. Investors view ETF inflows as key indicators of market sentiment, and historically, these inflows correlate with price surges, pulling ETH off exchanges and driving its value up. The record $726.6 million inflow on July 16, 2025, which saw Ethereum's price test the $5,000 mark, is a prime example of this powerful connection. While Bitcoin remains a strong store of value, Ethereum's complex capabilities demand more sophisticated investment strategies. This complexity can lead to volatility, making it crucial for traders to closely monitor institutional flows. The rise of Ether ETFs signals a redefinition of the institutional investment landscape, propelling Ethereum into the forefront of financial discussions and marking a pivotal shift in cryptocurrency's acceptance. But what happens when macroeconomic news drops like a bomb? We're about to reveal how US PPI data sent Bitcoin taker volume absolutely soaring on Binance. Forget the charts for a second, because the US PPI report just lit a fire under Bitcoin taker volume on Binance. Just as the crypto market started to feel bullish again, Bitcoin's price surged back above the $115,000 mark. Despite the noise from the US PPI report, BTC held strong, and trading activity on Binance absolutely exploded. This isn't just a small uptick. Market expert Darkfast reported a massive surge in Bitcoin taker by volume on Binance, signaling intense trading activity and a powerful resurgence in market momentum. This sharp increase shows a dramatic shift in trader sentiment as they position themselves around critical price levels, demonstrating vigorous engagement from both buyers and sellers. The jaw-dropping part? This $500 million surge in taker volume happened in just 1 minute following the release of the U.S. Producer Price Index data. Darkfrost highlighted this as a clear sign of a sudden, significant change in trading sentiment, proving just how susceptible the crypto market is to macroeconomic triggers. This event underscores the tight link between cryptocurrency and macroeconomics, especially with liquidity flowing directly into Binance's derivatives market. The PPI results themselves were better than expected, with core PPI YoY at 2.8% and a MoM reading of -0.1%, reinforcing the idea that inflationary pressures might be easing and causing markets, especially Bitcoin, to react positively. Now, let's talk about something that impacts your everyday life in a huge way. Could your Bitcoin actually be the key to unlocking your dream home in the UK? Imagine this. Your Bitcoin, the digital asset you've been hodling, could soon be the key to unlocking your dream home in the UK. This isn't science fiction. Experts are saying that Bitcoin-backed mortgages could be closer than you think, though significant hurdles remain. The value proposition is clear. A decade ago, buying an average UK home required over 1,000 BTC, but today, that same home might only cost around 3.9 BTC, thanks to Bitcoin's incredible rise. Platforms like Bulletin and even private lenders are already facilitating clients using their Bitcoin to purchase property. Australia has seen its first Bitcoin-backed mortgage approved, and even JP Morgan now accepts spot Bitcoin ETFs as collateral for trading. While mortgages are more complex due to their long duration, requiring collateral to hold value over time, the infrastructure and interest from major financial institutions are rapidly building. Challenges like regulatory frameworks, tax treatments, and managing volatility are still present. However, with Bitcoin's market cap nearing $2.5 trillion, its scarcity profile and ability to preserve purchasing power are strengthening its appeal as collateral. Lenders are managing risk with conservative loan-to-value ratios and automated liquidation triggers, and Bitcoin's volatility is structurally declining. Major institutions like BlackRock are tokenizing assets that can be used as collateral, and in the DeFi space, platforms are seeing substantial growth. The progression for banks is clear: custody, then brokerage, then deposits, and the next logical step is Bitcoin-backed lending. As regulatory clarity improves, especially with the UK's new crypto regime expected around 2026, we could see early adoption within 5 years, with mainstream adoption by high street banks taking closer to a decade. That's all the groundbreaking news for today. But before you go, make sure you're subscribed and have that notification bell on for more critical crypto updates. And that's a wrap on today's Bitcoin Bulletin. We saw Polymarket supercharge Bitcoin bets with Chainlink, Ether ETFs are dominating inflows, while Bitcoin ETFs see outflows, US PPI data sparked a massive Bitcoin surge on Binance, and the UK is exploring Bitcoin-backed mortgages. Don't miss out on any of these market-moving stories. Smash that like button, subscribe to the channel for more in-depth crypto analysis, ring that notification bell so you're the first to know when we drop new videos, and follow us on all our socials to join the conversation. See you next time.